Hello, viewers. Welcome to this episode of Neo Wealth Wisdom, a podcast series in collaboration between IIM Mumbai and Neo Wealth and Asset Management. I'm your host, Dr. Chiru, and in this episode, we're going to discuss family offices. Many of you would have heard this name, family offices, in media, in articles. In this episode today, we're going to understand what family offices are, what they do, and where they invest. Family offices are usually set up by large, wealthy families to manage their investments. As more and more Indians are becoming wealthier, the number of family offices in India has also mushroomed. From a mere 45 family offices in 2018, there are more than 300 family offices in India as we speak. To understand what family offices do, we have with us a man who has spent more than 16 years in this space, Mr. Amol Sathe, the CIO of one of the largest single family offices in India. Amol, thank you so much for joining us today.
My pleasure, and this is something, this is a topic which is very close to my heart anyway, because that's what I've been doing. Probably I can't do anything else. So,
So we'll dip into your knowledge. I'll start with a very basic question. What is a family office and why does one need one?
yeah, I mean, this is a very, it's actually a very critical question, even though it sounds simple, because see, a family office is something that doesn't have a legal format in India as of now. Right? We don't have, like, we have private limited company, or we have LLP, or we have public limited company. Whatever, all these formats are actually legal formats set properly, and there are rules and regulations around them. But family office is not something that is actually framed in a legal framework as of now. So you don't know what do you call a family office. I mean, is it a private limited company, a trust, an LLP? Nothing of that sort. So a family office, I would define it in a way. It's a it's either a group of entities, along with, of course, individuals, or just individuals, which operates towards a common goal, a common objective. And that objective usually is the preservation and growth of the family wealth. So I would define it in this way, where you may have trusts, you may have companies, you may have LLPs or partnership firms, or and of course individuals, because after all it's about family, so individuals have to be there. But the family's objective, it's served by all these entities and individuals, of course. So the entire bunch is a family office in a way.
So when you said in India there is no legal recognition for a family office, is there one globally?
In some countries, yes. For example, in Dubai, you have got a particular category of companies which is SFO, that is single family office. It's
It's
categorized
categorized
as, so
as a
you have a set of rules, you have proper regulations. What do you call a single family office? It's something very clear in those jurisdictions. Even in Singapore, they you can actually set up a family office under a category of a family office. So they have a category.
okay.
In Dubai, we also had a company earlier. It was named as uh, Mefezalia SFO DMCC. So SFO DMCC, it was actually in DMCC, but SFO is part of the name and part of a category which Dubai specifies very clearly what an SFO is. In India, we don't have it. I mean, it's okay. It doesn't really matter much.
But still they do exist, right? As we speak, there
Of
are more than
course,
300
of
family
course.
offices. Yeah.
So, what you call a family office is not very clear in legal terms. But if you see the nature of a family office, uh, then my definition, which I just told you, may fit into that. It's a group. It's a bunch of entities and individuals working towards a common objective. And common objective is the objective of the family. It can vary. So some families are quite aggressive in their investment. So they would say that, well, my objective is growth. Some are more conservative. They would say my objective is preservation, and some are moderate who would say that, okay, I want a preservation, but also want a decent level of growth.
Mhm. So whatever is the objective, family office ensures that that capital
Correct.
is
Objective,
that objective
is
is
achieved, and
achieved.
it's perpetual. It is not something like a one time thing that you achieve this objective and it's over. It's not like that, because wealth will keep growing. And those families who already have a going concern, they will keep receiving more wealth in
Going concern is like a
yeah,
company
going
which
concern is
is
that there's an
running.
operating business going on right now. So they haven't. So some of them have actually sold their businesses. Some of them have diluted their stakes. Some of them have um, just they're operating that business on and on perpetually. So they will keep receiving dividends. They will keep receiving certain inflows all the time, every year, and that family office will go on perpetually. So that growth will also be in the form of new inflows, at the same time the growth of the portfolio. Yeah. So these are very different kind of setups. It's very subjective.
Okay. When you were speaking, you just said single family office. Now, what's a single family office and what are the other kind of family offices?
Yeah. So single family office is, um, as the name suggests, it is for one family. So there is one family who has got this wealth, and the group entities, I would call them group entities, as a family office group entities. They are only, and the team who is sitting there, who's managing all this. They are doing this for one family.
And then the wealth will be so much that they have enough work, right?
Yeah, our single family office is professionally managed, but there is that entire portfolio which is spread across four continents in terms of exposure and investments. uh, Everything is for this one family. That is single family office. The uh, other type of the family office, I would say it's a multifamily office. But multifamily office is also an interesting concept. It has got two different meanings. One meaning is that many families, and this is not very prevalent in India as of now, but in US or in Europe, you will see that three, four different families come together, set up one team, and that is for sharing the costs. So it's not a sell side buy side situation. It's a buy side situation, but three, four different families will set up one team and build these confidentiality barriers if they want to.
Yeah, so the information doesn't
Correct.
leak
They
from
don't
one to
spill.
another.
Yeah, the information doesn't spill from one pocket to other pocket. But there is a same team who is managing all this. So this way, they actually it's quite economical for them
Right.
naturally.
The costs come down.
Absolutely, cost comes down, and of course they can actually have a well experienced professional team managing all this. Otherwise, sometimes what happens is, if you want to, and this right now, this is a situation that there is a severe talent crunch in the family office industry, because the speed with which family number of family offices are increasing, the professionals are not coming in that much, because the experience, I mean, a family office which is just set up in 2 years ago, 3 years ago, how much experience a person can have? Sorry. So uh, this enables them to actually engage and hire highly qualified, very experienced professionals, and afford their cost because they are being shared by three, four different families. So this is a multifamily office. Another aspect or another type of a multifamily office is when an outfit which is outside the family office, like a setup which is outside the family office, is advising a family. So the family is actually engaging a sell side uh, setup, sell side entity. That is also a multifamily office. Only issue with this that I see is that many a times wealth management companies uh, also create a setup they call multifamily office. And the issue with this again is that there is no legacy of a single family office behind it. So this is a multifamily office definition right now prevalent in
So
India.
this kind of multi-family office is not restricted to a group of families which come together, like you just explained, to
Yes.
save costs. It is
Yes.
just a service that is provided to various family offices, but
Various
specifically
family
tailored to the needs of a family office.
Yeah, the advice is tailored, but my apprehension doesn't come from the tailored or customized part of it. It comes from the lack of legacy of a family office, a single family office. So when a single family office will go into a business of a multifamily office, that is something that you can actually call a real multifamily office, because the approach towards the investment management, the approach towards um, the non-investment aspects of family office also is very much there, because this family office actually has been a single family office for a long time, and then got into a multi-family office space where they're advising other families. But this is not something that you very easily come across in India. um, Western countries, you will see some family offices also become, and this is something quite common, but in a different form in the Western countries. They actually create funds.
Okay.
So they become they are family
Yeah.
office, and they create a fund which they are anchoring anyway,
Right.
but they will also accept third party money into that fund.
And all their money is in that fund, or only a part of it is in that fund?
No, so this is like a fund, just as a proper fund where you have either private equity or a venture
So
capital or
basically a
any.
multi-asset class fund sort of a thing?
It can be a multi strategy as well.
Okay.
But here, the main chunk of that fund is actually coming from the single family office.
They are the anchors.
So, yeah, they are the anchors. So, most of the times, people also find this a bit more uh, comforting, that the skin in the game is pretty much there.
Right.
So it's not something that you are creating a fund. My investments are somewhere else. I create a fund where I'm not just putting hardly probably, as Indian regulation would say, that put 5%, 10%, whatever the regulation is. And I'm just doing that and then telling everyone to put money. It's
But
not
why
like
would
that.
they even need others to come and participate alongside them?
Well, first of all, they get fees out of it.
Okay. Yes.
They also, so their own expenditure reduces because of this. Like, anyway, I'm going to manage this kitty,
Right.
right? I'm going to manage, say, 100 million anyway. So if I actually get 100 more and I charge 2% on it,
Right. It covers for your expenditure here. Understood.
so it is economical for them
We
basically.
did discuss quite a bit about cost. So at
Yeah.
what level of wealth can a family afford a family office, or should think of a family office?
Yeah, interesting. So this is a question which I used to get a lot actually earlier. And because many families, who come into money because of dilutions or stake sales or whatever it is. Uh, I wouldn't really say that this is dependent on the size or the uh, quantum of wealth that they have received, or that their corpus is. I would say let's look at it from other side. How much it would typically cost to run a single family
Right.
office,
Yeah.
right? And then what you can do is, okay, in that case, it forms so and so percent of my wealth, whether I'm willing to spend that much, right? So I would say a full-fledged family office with a CEO, a CIO, um, and the backup staff, that is the backend team which does accounting, it does banking operations, it does taxation, the return filings, also compliances. So depending on the complexity of the family office, all in all, it would cost somewhere around 5 to 6 crore a year.
Okay. 5 to 6 crores is
Yeah,
cost of
this is a
running.
ballpark, just a back of the envelope kind of
Correct.
calculation. It would cost around 5 to 6 crore per year. So it's a recurring
Right.
cost, right? And then if someone is 500 crore worth, would say, okay, this is 1% of my
Right.
corpus. Whether I am willing to spend 1% of mine every year. So that it is more like a cost contribution kind of consideration or calculation, where you would say, okay, this family office, because I'm setting up a professional team here who will manage everything. My the value addition that this team is making is probably say 3%. I mean, just an
Yeah,
estimate.
how do you gauge that based on the extra alpha you get on your portfolio or some
Yeah,
such?
yeah. So alpha, I mean, alpha over what?
Huh.
Many a times, this is also a big
Benchmark is a
question.
very big question, right? Yeah.
Absolutely. Benchmark for family offices is not a very easy thing to do because you are multi asset class, you are multi strategy. So it's like uh, you don't know which benchmark I'm going to use and in what weightage. So I can use all benchmarks. And I would say my portfolio has outperformed CRISIL composite bond index. But in the first place, whether that was my investment strategy or not, that is the question. Did I really want to create a bond portfolio? I don't know. I mean, my,
But it's clear, right? Based on the asset allocation, maybe you'll at least arrive at a blended benchmark sort of a thing.
you can, but in that case, what happens is your benchmark also becomes dynamic.
Huh, because the asset allocation is changing.
Yeah, because asset allocation is changing. So one thing that can be done, it's not very accurate, but at least something that I thought and try to create at family office is that you create a benchmark based on your strategic asset allocation.
Okay.
So strategic asset allocation is at the top of the entire scheme, right?
Strategic asset allocation is a
Yeah,
long-term asset allocation that one
strategically,
would
say for
envisage,
example,
right?
strategically, I don't want to invest more than 50% in equity as an asset class. For example, I don't want to put more than 10% in bonds or fixed income. I don't want to put more than 20%. And this is why I'm saying more than because this is going to be a range. If I fix a number, my rebalancing will become too frequent. If I say 50%, now mark
And it breaches the 50, then you are sitting
because
there and
mark to
rebalancing.
market will keep moving my portfolio value. And then, every time I'm taking a review, I have reached 52%. Well, cut 2%. That may also result into adverse taxation because if it is short term sale, right? So all these things. So touching back to the first question, what a family office is, here again I'm just putting it once again, is family office does not only look at investment side, because investment of course is the central pillar of it, but all these aspects form a family office. Unless you have banking operations, accounts, taxation, everything under one roof, and in every decision that you are making, all these aspects have to be considered, then only it becomes a family office. Otherwise it's just an investment entity.
Correct, because you just have analysts looking at various asset classes,
Correct.
right? Okay.
So coming back, here you would say that okay, this benchmarking is not very easy, but you can create a broad benchmark based on your strategic allocation. And then there is a layer of tactical asset allocation which you do after strategic.
Tactical is something short term, which is
It may not be short term, I would call it opportunistic.
it is like a delta over the strategic asset allocation, like plus or minus, or
No, the strategic allocation can never be breached. That's why it's strategic. So you can say, okay, my range is 45 to 50% as equity allocation. And this 5% range is permissible whenever it actually.
it can be either
No,
45,
no, no.
50,
It can
or
be anything in between.
anything in between. Yeah, anything in
Then
between.
the mark to market movements don't really bother me much.
As long as it is in this range of 45 to 50. Now, what is tactical allocation then?
Now, tactical is that, for example, I see an opportunity. Let's take a live example, which is InvIT space. I'm very much positive about it. I like the concept. I like the risk reward ratio that it is actually offering right now. This is opportunistic because I see some InvIT is now say coming up with a QIP, and I have resources. I have connects in the industry to uh, get a large chunk. I'm not. I don't want to get into a QIP, but I want to get a large chunk, and I can do it. Now here I have liquidity to do that. I have resources to make it happen. I have got good connects who will actually create that kind of deal for me, source a seller, all those things, right? And then I know that there is a little bit of movement in my allocation because of this investment that I want to make. It will actually change my fixed income allocation a bit.
A bit as in if you would have envisaged a 10%, let's say it becomes 12%.
Yeah, it may.
It may. You are okay with it because
I am okay with it because here, what will happen is because I do this, I can take some part away after this later to make it 10% again.
so you are going to rebalance it eventually, but
I'll
now you
rebalance.
want to do that.
Now I am, because right now is the good opportunity. I don't want to do all those bureaucratic things first and then create that liquidity and then go for this deal, because this deal is quite short lived in a way. It is going to go away. So I want to take that opportunity. Tactically, I am taking this opportunity. Tactically, I am taking this decision to move away from the strategic allocation a bit today, but I am going to rebalance it. So this is tactical. This is opportunist. I see this is happening in front of me. I don't want to let go of this good opportunity. So now, if you really see what's happening here, is strategic allocation will shake a bit for some time, but will come back. That discipline, a family office can never, yeah, that discipline is the most important thing. Otherwise, what will happen is then you are actually only investing opportunistically, and you don't know how much risk you are taking in the process. The risk reward is something that you don't know what is going to play out. So, and what is risk? It is undesirable, unknown outcome. That's what risk is.
Correct.
So, if I don't want that kind of outcome to come, I need to first gauge the probability. Accordingly, I take my decision and vis-a-vis the return that I'm expecting out of it. So, taking a 20% risk and getting a 25% return, this is one case. The other case is taking a 5% risk and getting a 15% return. The latter is better for me.
Correct. Risk adjusted wise, that return is better.
Even though it is 15 and 25, for
Right.
25 I took 20% and for 15 I took 5%. So this is what risk adjusted returns is a concept which has to follow that discipline. That's why strategic, you can create that benchmark like that.
And how do you monitor all these things? Do you have systems in place to do it, or is it manual? I understand there are teams. You have a compliance team you spoke about. There is an accounting team.
Yeah. So I mean, systems, we have systems, but these are internal processes rather than, I wouldn't call them systems, because systems has a technology angle to it. Right now we don't use much of technology. I mean, we should, and we are actually going towards it.
Right.
We are learning more on the technology side as such. But right now, again, this is a very subjective thing. A family office itself is a subjective thing. So what the family wants is going to govern the processes that you set up.
Right.
If family wants fancy reports with good pie charts, shining slides, etc., you will do. You will create a system to produce that every month, quarter, whatever.
That's possible.
Yeah. If the family says, well, all that cosmetic things don't really matter much. I just need clean, good data. That's what I want. I want an Excel sheet which will give me every information in a very clear way, crystal clear. That's what I want. Forget about everything else. You set up systems like that. It's very subjective.
Okay. And when you spoke about the various people in the family office, you said there's a CEO, there's a CIO, and there's a whole big team.
Correct.
Is nobody from the family present there, or sometimes the family members are also present?
Again, very subjective. But because if you ask me about the industry, that this is how the industry operates, it's very difficult to say because it's too subjective in that sense. Some families want control. Some families want, so there are various grades of their involvement in the family office. I have seen families who themselves are quite savvy in terms of investment management. They would say, I just want a team which will execute efficiently. The decision making lies with me, or the family. Even there are different levels of family members involvement also, because someone said, okay, this is the family member we designate who is going to take care of the family office.
Correct.
Some say, no, we have an investment committee of all 3-5 family members.
All of us together are going to take
All
the
of us together, we sit together, we decide what to do, and the family office team will execute. Uh, and then there is the other extreme, is that family says that, look, I know that money management is not my cup of tea, because I mean they are very good businessmen. They have got um, say an operating business with that is uh, 50 60,000 crore market cap, very well established say manufacturing player. Said, I know how to manufacture things, I know how to sell those things in international market,
Right.
but I don't know how to manage money.
Hmm.
It's a different ball game.
Correct.
And these are more evolved kind of families who know what exactly they are good at and what is not their game.
Hmm.
They will set up a team which is experienced in that game,
Right.
and then that delegation
Delegation
will
correct.
happen.
Yes.
Say, okay, you guys are sitting here, you are the professionals, you are experienced, you take decisions, but those decisions we will have a veto. For example,
Right.
we'll have a veto, your last word. That much involvement we'll only have. That if you, of course, you will create all MIS, everything, that we'll keep reviewing all these things. And this, of course, that's it's our money. So we have to review, we have to
Yes.
keep an eye on it. But if a decision is made from your side, you will still present it to us. Unilaterally, you will not take a decision, but you will present it to us. Say, create a rational note. That's what we do. I personally write a rational note. It's not a very
For every
long one.
decision
It's
of
a,
yours, yes.
Yeah, it's a memo.
Hmm.
Not very long one. Maybe just a one pager or 1.5 page. All essential facts are given in that memo. All rationale that I have in my mind why I am saying this is a good investment is all written into that. Where the liquidity is coming from. As I said,
fund that investment.
Yeah,
Huh.
as I said, investment decisions for a family office are never investment alone. They take into consideration all the peripheral aspects of where I'm going to take, where I'm going to fund it from.
Huh. Because you have to pull the money out from somewhere, and that's a
Correct.
decision
Because
in itself. Yeah.
obviously that kind of money you are not going to put in bank account or current account which yields zero interest. You are not going to do that. So you will put it in arbitrage funds or a liquid fund or something of this sort, which is safe and liquid. Okay. Whenever that opportunity knocks, you know 2 days are required to get that liquidity in my account, because today I place a redemption, I'm going to get money today. Someone comes and says, excellent opportunity, but only tomorrow do it. We say we can't do it, because even if today I place the redemption, the money is going to hit my account day after tomorrow. So that management is also part of this. Everything is written there in that memo, and family goes through it, ask questions if they have any, but it's a very efficient process, because they don't have to really go through all the decks, presentations, meetings, calls, nothing.
Correct. They have a summary presented by
They
you.
have everything condensed in that 1.5 page, which I have done earlier, all the legwork, everything. They just see that. They read it, they said, okay, all these are the facts. We are fine with this. That's the delegation. So family offices operate in a very, very different ways as such. As I said, there are no rules and regulations. It's completely subjective. What family wants, that's why I defined it as that bunch of entities, or that group of entities and individuals working towards a common goal is the family office. So their goal may be creating 15% return every year.
And your job is to find those ideas.
Or they would say, protect this first, match the rate of inflation to maintain the purchasing power, and then grow. So one's first objective is focused on very much, and then okay, I know that this is going to create reasonably this kind of return, say 5.5%, 6%. Then with the rest of the capital, I can take
Extra risk.
so different levels of risk I can take.
Correct.
I can go into some would say, okay, I want to get into derivatives
Right.
because I want to create that enhanced return,
Right.
alpha. Some would say, no, I just want to put all these other things in a large cap fund.
Right.
Or I want to grow with equity market, but not too aggressively. So it's completely subjective.
So Amol, you spoke about ideas where you invest, right? So where do you get that access from? The reason I ask is, let's say you spoke about InvIT. Now there'll be a lot of institutions also wanting to access the same InvITs. There'll be many wealth management outfits also doing it, and there's you. So where do you A, get to know where that idea is, and B, how do you get access to it?
No, very, very important question. Rather, now, let me take you back, say, 7, 8 years ago. Till that time, Indian family office industry was very, very closed door kind of industry. No one wanted to share anything with other family offices. It was completely, I mean, confidentiality.
Almost like competing with each other?
No, they were not even competing. They were completely closed. Like I said, I'll manage my things and I don't want to, get involved in anyone else's, or I don't want to talk to anyone else, because that data, that sensitivity and the confidentiality of their information was so much on their mind all the time that this is a very, uh, insulated kind of setup for me. It was there. So the family offices were not talking to each other. And in that sense, we were and we still are quite behind the Western family offices who have evolved a lot over long years. Basically, our family office industry is still nascent. Cut to post-COVID, because what happened in COVID was that people suddenly realized that in my own cocoon, I am absolutely not able to find any good opportunities anymore, because I am not meeting sell side people that often that I was earlier meeting. And then suddenly a thought, I was witness of the entire process, because I was in the industry since of course I am there since 2012. Yeah. So I saw that entire evolution, how family offices started talking to each other. There was one WhatsApp group which was created in I think 2020 by one of my fellow CIOs of another family office.
Invite only?
Invite only, absolutely. Only, and not just invite only. It has to be vouchable. It has to be, so any new entrant has to be vouched for and introduced by some existing member.
Correct. That way you get to know whether the person is genuine or not. Okay.
So the invitation will only go to that person.
Right.
Someone has to say, okay, I know him for so and so years, and he is a family office professional, and I know him for that. That's how the group was formed. Then a platform came up later on. So there are now rapid changes that are happening, and because the family offices are talking to each other, these opportunities are flowing to everyone now.
Enough number of sell sides must be approaching different family offices. They share the information.
That is one.
Yeah.
And secondly, they themselves are originating something, and they can share with people. So, for example, I mean, this is incredible right now. If you really see the number of PMSs in India,
right,
more than 900, 950 something.
Yeah, it's too many in number.
Yeah, how are we going to evaluate these people? It's not possible, right? So, here what's happening is, I shortlist someone approaches me, and I find it reasonable, I find it good. I'm just going to put it on a group, or just bounce that idea of someone, and say 3-4 people will say, yeah, we have evaluated them. Yeah. We have created an internal memo. Happy to share with you.
So you can cross-check with others' intelligence and then see.
A lot. This is collective intelligence that is happening now. So because of that access, now because of this network, the access has grown leaps and bounds.
And you do startup investments also, because family offices have been the flag bearers of the startup ecosystem in India.
It's true. No, what I say is true, but this is again very subjective. Our allocation to private markets is quite low, because our objective, the mandate, is preservation first and then growth.
Okay. So in your specific case, you don't look at it.
We don't look at.
But that much. WhatsApp group or the sharing mechanism where there is a lot of information on startups,
yes,
I assume.
Yes, absolutely. I mean, there was something we created called private deal room.
Okay.
So people who were interested in doing venture capital, or interested in doing some direct startup investments, or even early stage, they would just come together
Okay.
and say, okay, I am evaluating something quite interesting. Is anyone interested? Let's do it together. So they can actually now negotiate better terms, even funds. They can negotiate better terms with the funds,
Yeah.
better pricing now. So all that buy side is coming
Correct.
together in a way, and that is very, very welcome. And that's how the industry is growing.
Right.
And that's why where do we originate or access the deals is because of this now, and also because of this many sell side people
Right.
offer it to us,
Right.
saying that I know that you may actually talk to 3-4 different families. If you see, I have a block right now for sale, which is say 30 crore. You're not going to buy 30 crore. If you don't want to buy 30 crore, you can. But if you don't want to, you want only 15. You can actually bring 2-3 families
Correct.
who will make that 30 crore block and get a great pricing on.
And I've heard of PMS managers who are not working with distributors. Maybe this is their way to get capital directly because they can get a larger check and fewer investors.
True. That is also true. And another thing is families are also becoming more and more sophisticated in terms of their dealing with the sales side. So they prefer not to go to distributors. I mean, if I have this kind of access, why would I
Right.
go to a distributor? I will say, cut that extra cost,
Yeah.
and I will just approach someone directly,
Yes.
and I get a better pricing anyway, right?
And most of the family offices are also investing internationally, right?
Yes.
Now, there's a lot of news that I have seen.
Yeah.
Now, are you guys not happy with the India returns, or you think diversification is important?
Yeah, the latter is true. I mean, and not being happy with the returns is not a problem because India is still delivering great returns.
Yeah.
Let me give you just two quick reasons why this is happening and why this should happen. We started way back. We started investing in overseas markets back in 2006,
Wow.
before my time, when the LRS
God.
limits were $25,000.
Right.
And over a period of time, we also explored various completely kosher legal ways to remit more, and we created a very significant corpus outside. Why? First of all, geographical diversification is extremely important. It's quite underrated. People don't pay much attention to this, but it is extremely important because no matter how much you diversify in India, you will always be exposed to one risk, that is regulatory risk.
Correct.
Because whatever you do here, entire portfolio is subject to the regulation of one country. Tomorrow, I mean, the very, very apt example would be when in 2018, when the capital gains tax on equity was introduced, the 10% one. That hit a large chunk, many portfolios, many family office portfolios,
I'm sure.
suddenly.
Because it was tax free till then, and suddenly you put in a 10% LTV.
Something was tax free, and nowadays, I mean, it may not be very significant or large impact. I'm just saying that it impacted.
Correct.
It impacted a large chunk at once. So this kind of regulatory changes will always be a risk.
It's a one country risk basically at the end of the
So
day.
when you diversify, you put something in Singapore, you put something in Zurich, or that time we used to manage one portfolio in Zurich, one in London.
Okay.
And it doesn't matter where it is. It actually matters where you are investing.
Correct.
So because withholding tax is also one of the things that you have to consider. So withholding tax is like a TDS.
Okay.
Like Microsoft will distribute a dividend. 25% is directly cut before you receive
even
it.
gets credited to our
So
account.
maybe your jurisdiction where you set up the portfolio may be tax free, but that withholding tax is there, which you have nothing to set it off against.
And okay, that's the US way of taxing
Yeah.
every
So you have to
income. Okay.
think about all these aspects and create a diversification where the taxation would be minimal. Not minimal, I would say it should be minimum. You can bring it to minimum and you can make it more efficient from tax angle. So this is one reason. Other reason is that there are so many asset classes which are not present in India. I mean, they're not available in India. Well, hedge funds, very broad term, right? It's very broad term. It's very vague. It's very broad term. But underlying funds run so many different strategies that the term is very broad. But what do you call hedge fund, right? is basically something that is, I like to call it market neutral, which doesn't have a directional risk. So, for example, you are investing in a fund which is essentially a merger arbitrage fund or special situations arbitrage. It's basically arbitrage, right? If it is arbitrage, how does it matter where the market goes? It's neutral to it. It doesn't assume any directional risk to that. Equity market goes up or down, fixed income market goes up or down. This fund has got nothing to do with it because it's doing arbitrage. Rather, more volatility is better for them.
Absolutely. The spreads will go up.
Yeah, spreads will go up. So you have commodity arbitrage. We had invested in a fund which used to invest in these arbitrage opportunities on 3 exchanges.
Okay.
So Shanghai, London, Chicago.
Right.
It was actually playing all time zones.
Right.
And running round the clock because of this.
Right.
And great opportunities because the distance and all these things, the spreads were amazing. We used to get around 6.5% kind of dollar returns that time.
Wow.
So this is the level of rupee returns that we get usually in Indian arbitrage funds.
Right.
So you add 4% as a INR depreciation, you are actually getting 10.5% risk free.
Right.
This is something that is not available here. Why? Because of capital controls and lack of depth to Indian markets. There is lack of depth in what sense that if you write, say, a 1-year option, no one's going to buy it. There's no liquidity. So the depth is required to run these strategies. They can do swaps, they can do arbitrages between two rates, two sovereign rates. They can do a lot of things. They can do multi-strat. There was a fund which was like at a master fund level. You invest. There were 16 managers sitting below the master fund, running their separate strategies.
Okay.
And the risk management was happening at the master fund level. So you say if you are and for drawdown based risk management. So if this manager is say 3% down, his position is cut to half.
Okay.
He goes 5% down, he is out. Everything is removed. That kind of stringent
Active
risk
management across all the managers. Okay.
It was beautiful. So this kind of strategies you can't play in India.
Right.
This is the second reason why one should also
That's why you all look
Correct.
global.
Correct.
That's very interesting. Thank you so much, Amol. It was a very interesting discussion and we learned so much about family offices.
My pleasure.
Thanks for joining
Thank
us.
you very much.
Dear viewers, I'm sure you have gained greatly by understanding what family offices do by watching today's episode. For more insightful discussions on wealth management, please stay tuned in. I'm Dr. Chiru signing off. Until next time, take care.